we want to look at the pay-as-you-go income taxation system. PAYG stands for pay as you go. Taxation system. This particular system is the Australian tax collection system. This is the Australian tax collection system that is run by the Australian Tax Office. It is run by the Australian Tax Office, which is also abbreviated as ATO, Australian Tax Office, on behalf of the federal government. It is run on behalf of the federal government. The funds that are accumulated by the Australian Tax Office are remitted to the federal government, and these taxes are used to pay for several government functions like education, healthcare, roads, railway, airports, and services. Services such as the police service, fire brigade, etc. So it is a very important system in the Australian government. Another thing that we ought to know about this particular system is the duration of a financial year. In Australia, a financial year runs from first July to 30th June the following year. I had already mentioned this in our previous lesson, in our last lesson, that a financial year in Australia runs from 1st July to 30th June the following year. Hence, all those involved in meaningful employment where they earn something, they are supposed to pay taxes. But these taxes are paid by people who earn above a certain amount of salary or wages, as we will see as we proceed with this particular lesson. Not all the people will be paying, because some people earn so little such that the government cannot be able to tax them. It can be able to tax them, but it just decides to exempt them from paying taxes. And at the end of financial year that runs from 1st July to 30th June the following year, all those ones who pay taxes are supposed to fill what we call tax return forms. These tax return forms are essential in that they are used to assess the amount of tax that you have paid. If you have paid the right amount of taxes, income tax. If you have paid the right amount, of income taxes, you are okay with that obligation. The government gives you a green light to continue with your work. But in the event that you happen to fill the tax return forms and it is discovered that you underpaid, the taxes, you are supposed to pay for the remainder bit of that particular tax. It is called, you have a tax obligation, a tax liability in that you are supposed to pay the remaining amount of taxes. And how do you know that you have underpaid? You will receive a letter from ATO, that is Australian Tax Office, notifying you that you have actually underpaid in your tax obligation, so you need to pay much more. And in the third scenario that you happen to have overpaid, if you happen to have overpaid in your tax obligations, the Australian Tax Office will give you a refund. You are refunded the overpaid amount. You are refunded the overpaid amount. As we proceed, it is also important that we take note of the following, that the Australian taxation system is not fixed. It keeps on changing. It is subject to changes. And in fact, that is what brings in the underpayment and the overpayments, most of the cases. Hence, the need for one to fill the tax returns. Also, the ATO website the Australian Tax Office website has some tax calculators. So the moment you log in that particular website, there are several tax calculators that can be used to determine the amount of tax, income tax one has to pay. It is a public website that can be accessed by any worker in the event that one is in need of knowing the amount of tax he or she is supposed to pay. Having looked at a few things pertaining to the pay as you go taxation system, I would like us now to move on and look at how it operates. How the pay as you go tax system works. The system works as follows. Here I want us to use a diagram to explain how this particular system works. In the first incident, we can have several blocks. Here we have B. The letter B stands for the boss. The boss. This boss is your employer. B stands for the boss, who is the employer. And we can have another block here. With letter U, which stands for you. Which stands for you, the employee. You, the employee, and a taxpayer, the one who pays taxes. And our third block here has a letter C, which T, which stands for the Australian. The Australian Taxation Office. ATO, the Australian Taxation Office, because we have said that these offices are the ones mandated with the responsibilities of collecting taxes on behalf of the federal government. The moment they collect the taxes, they remit the same to the federal government for it to spend. Yes, from this particular chart, I want us now to dwell on the letter B, U, and the letter T in our explanations. We are going to use the letters B. When you see the letter B in our coming statements, you will know it refers to the boss or the employer. And when you see the letter U, it means you, the employee or the taxpayer. And the letter T, when you see it anywhere, it will signify the Australian Tax Office. You work for, and get paid by B. You, the employee, work for and get paid by B, who is the boss. This particular boss can pay you weekly, fortnightly, or monthly. The same B that you work for, who is your boss, calculates the tax that you should pay, for the amount earned by you, where you means the employee or the taxpayer. Then the same person B, who is our boss, sends that tax to T. Sends that tax to T, the Australian Tax Office, every time you get paid. Every time you get paid. So that means every time you get paid, B, who is your boss, calculates the amount of tax that you are supposed to pay, then remits the same to T, who is the Australian Tax Office. While this person T remits the income tax to the federal government. To the federal government, the taxes that the office have collected will be remitted to the federal government for the government to spend on the various functions that we have learned earlier in this particular lesson. Another thing that we need to know, on July 1st, and October 31st, you need to complete or to fill the tax returns. You need to complete the tax returns as we have learned earlier in this particular lesson. And when you complete those tax returns, you need to send them to T. To the Australian Tax Office. You can decide to complete these tax returns and send them to Australian Tax Office, or some people will pay agents. Agents to fill the tax returns on their behalf. That is at a fee. In these particular tax returns, there are things that you're supposed to fill in. You need to declare a few things. you fill the following. One, you need to fill all forms. Take note of the word all forms of income. All forms of income, including interests from investments. This means you are not only going to pay taxes based on your wages or salaries, but you are also supposed to pay taxes on other incomes that you get, maybe from investments and interest and such like things. So you need to fill them in your tax returns. The second bit, you need to fill in legitimate. Legitimate deductions shown. How do you feel legitimate deductions shown? You need to have receipts. You need to have receipts and invoices. Such as work-related expenses and donations. Maybe you have an investment, you run a certain company where you are getting some more income apart from your gainful employment. You need to fill the legitimate deductions due to that particular company, supported by receipts and invoices, and also donations that your company might be doing in form of maybe giving back to the society, so that when you are taxed, the tax system might favor you a bit, because these legitimate deductions and donations reduces the amount of tax that one pays to the ATO, Australian Tax Office. The taxable income can be calculated from the following formula. Can be calculated from this particular formula. Taxable income is equal to gross income minus deductions. Remember, in our previous lesson, we had looked at pre-tax deductions, and an example of the pre-tax deduction that we looked at was the car expense. So if you have proved these deductions using the receipts and invoices, then you will discover that your taxable income will reduce, such that they will deduct from your gross income. They will subtract the deductions first before they let your income go through the taxation, the different taxation bands that we have in the taxation table that we are about to see. There are tables. There are tables and calculators on the Australian Tax Office website, such as the following. This is just an example of one of the tables that we can find on the Australian Tax Office website. Here we have the taxable income. And in the second column, we have tax on this income, the actual tax. The actual tax on that income. In the first band, those people who earn between 0 and $18,200, they don't pay any tax. They don't pay any tax. Those ones who earn between $18,201 and $37,000, they actually pay 19 cents. They pay 19 cents for each dollar. For each dollar above, for each dollar, for every dollar above $18,000. So anything that they earn above $18,000, they will pay 19 cents. And for those ones who earn between 37,000 and $1, between $37,000 and $1 and $80,000, they pay $3,572. They pay $3,572 plus plus 32.5 cents for each dollar. For each dollar above for each dollar above let me check. For each dollar above $37,000. For every dollar above that, they'll pay 32.5 cents. They'll first of all be deducted 3,572 plus 32.5 cents for every dollar above that. Next, for those ones who earn between $80,001 and $180,000, they actually pay 17,547 plus 37 cents for each dollar over 80,000. And lastly, those who earn above 180 and $1, 180,001, they pay 54,547 plus 45 cents for every dollar above $180,000. So this is the taxation table that is used. So if you earn less, you pay less. If you earn more, you pay more. That is what you should realize from this particular table. The more you earn, the more taxes you pay. The more you earn, the more taxes you pay. These particular tables, this table can be used to calculate the amount of tax you should have paid. The amount of tax that you should have paid. This is basically means the tax payable. The tables are used to calculate the amount of tax payable. As opposed to the tax you did pay. As opposed to the amount of tax you did pay during the year. As opposed to the amount of tax you did pay during the year. This is to mean the tax withheld. The table basically talks about the amount of tax you should have paid because they keep on changing. So if we talk of the tax we did pay, the table might have already changed. So that we will be talking about the tax withheld. And each row in that particular table is called a tax bracket. Each row is called a tax bracket. Tax bracket. So you'll discover that some people will fall in the first tax bracket, the second tax bracket, the third, the fourth, or even the fifth, based on their gross, their taxable income. Their taxable income will determine the tax bracket in which they will fall. Those ones who earn less will pay less, so they will fall in the first tax bracket. But those who earn the highest will fall in the last tax brackets. And those ones at the middle will fall in their respective tax brackets. Apart from the taxes, the government also can decide to have some more levies. And such a levy is like the Medicare levy. So you may also need to pay the Medicare levy. The Medicare levy. This is basically a medical scheme in which all the Australian working population contribute so that we can have an effective medical system in the country to take care of all those ones who can afford to pay the medical bills and those ones who cannot. The current Medicare levy system is at 1.5% of their taxable income. So for us to get the amount we are supposed to contribute towards the Medicare fund, we actually calculate 1.5% of the taxable income. As I have told you earlier, that it can happen that you have paid too much taxes during a financial year. The Australian Tax Office will give you a refund. And if it happens that you have paid too little tax, you will have to receive a letter from the Australian Tax Office asking for the tax liability. Asking for the tax liability. So when you receive a letter asking for the tax liability, this basically means you have some taxes that you have not paid. So you need to add on some amount so that you pay the required taxes. Having looked at the several aspects of the Australian tax system, or the pay as you go tax system, I would like us now to take this opportunity to answer a few questions to gauge whether we have understood the content that we have just had. The first question requires us to complete this statement. Complete this statement. Taxable income is equal to dash income minus dash income minus dash. This refers to the formula that we have just learned, that for us to get the taxable income, you can make reference to the short notes that you've made, that for us to get the taxable income, we need to get the difference between gross income and deductions. This means taxable income is equal to gross income minus the deductions. That is the first question. The second question is for us to gauge whether the following statement is true or false. And the statement itself is the highest income earner in Australia pays 45 cents tax for every dollar they earn. For every dollar they earn. Is this particular statement true or is it false? This requires us to go back to our taxation table to see whether the highest income earners will tend to pay 45 cents for every dollar they earn. And when we check, that statement is actually true. The statement is true because in the tables we are told for those ones who earn $180,001 and above, they pay, apart from paying $54,547, they also have an additional of 45 cents for each dollar they earn over $180,001. So the statement can't be further from the truth. The statement is true. Let us look at another question. That is question number 3. In the 2012-2013 financial year, somebody by the name Greg paid no income tax. Greg did not pay any income tax. What could his taxable income have been? That is a question. What could his income tax have been? When we go back to our table, you will realize that those people who don't pay taxes, their income tax is between $0 and $18,000. So his income, taxable income, could have been less than $18,000. Was less than $18,000, or basically between $0 and $18,000. People between this particular tax bracket, they don't pay. They have nil in taxation. That is where his taxable income should have lied. Let us look at one last question on this. In the year 2012-2013 financial year, earns taxable income was $80,000. $80,000, which puts her at the very top of the middle tax bracket. You can check that from our table that I've just given you. Ben's taxable income was $80,001, a difference of $1, which puts him in a higher tax bracket. That difference of $1 puts Ben in a higher tax bracket compared to Anne's. Assuming that there are no medical levies, how much extra tax did Ben pay? Compared to Anne? I know you are looking at your tables, but how come a difference of $1 can put these two people in different tax brackets? Anne is in the middle tax bracket, that is the third, while Ben moves on to the fourth one. Just confirm from your tables. And that difference actually brings about a difference in the amount of tax that they pay. For us to compare, we need to get Anne's tax payable and also get Ben's tax payable so that we can compare the two figures. Let us start by looking at Anne's tax payable. Anne's tax payable. Looking at our table, that third in the third tax bracket, Anne is supposed to pay a total of $3,572 plus an additional of 32.5 cents for every dollar above $37,000. So this is a 32.5 cents, which is actually the same as 32.5 out of 100 cents. Remember, as we learned when we introduced percentages, cents means 100 parts. So 32.5 cents is the same as 32.5 out of 100. This will be multiplied by the difference between $80,000 and $37,000. For every dollar earned above $37,000, you pay 32.5 cents. So when we calculate this, we will get, when we calculate this and we add together, we will get $17,547. This is earns tax payable. Let us look at Ben's. Ben's tax payable, because he's in a different tax bracket, it means he's going to pay much more. Apart from paying $17,000. $17,547. He is also supposed to pay 37 cents. 37 cents for every dollar above 80,000. So, and when we look at his taxable income, is actually $80,001. So the difference between them will be $80,001 minus 80,000. And this will give us a difference of $1. That difference of 1 multiplied by 37 out of 100, it will give us $0.37. $0.37 added on to $17,547 is going to give us $17,547.37. That is the tax payable due to Ben. When we compare them, we want to know how much extra that Ben will pay compared to earn. So the extra paid by Ben will be equal to Ben's tax payable minus earns tax payable, and this will give us $17,547.37 minus $17,547, and this will give us $0.37. This is the extra amount in terms of tax that Ben will pay. So this particular example shows that the more you earn, the higher the taxes that you will pay. Thank you for attending this evening's lesson, and I hope to see you in our next lesson where we'll be looking at the actual calculations of taxes through the different bands. We will be looking at the examples. How do we calculate taxes through the given bands based on the various taxable incomes that various people will be having. Thank you so much and welcome.